Day to everybody. Y'all, we are really looking forward to everyone that's coming out to Bakara here in just over a month. We're getting ready to do the final details on that. Z hopefully is working hard to get his 33 done. I don't envy him at all, but we'll be able to relish in his success from it. But man, it's a tough endeavor. I know, G, you got to be pretty busy over there, brother.
We are busy as always. It is the summer. Obviously, we're in a summer market, guys. Welcome to the weekly call. It's our 80th call, July 13th, 2026. We're glad you're here with us. Remember, we're not a registered investment advisor. Past performance, no guarantee of future results. All carnivore trading portfolios are hypothetical. Nothing on this call should ever be construed as individual investment advice, and you should do your own damn research. Special thanks to everyone out there that we lean on, borrow from, steal occasionally. So here we are, guys. If Trader Z didn't have another reason not to sleep, now he gets to watch Korea every night, which tends to basically lead our markets, as we've been talked about kind of on the last call, why Korea was so important. You got three big memory names in that index. Samsung, a part of that index, SK Hynix. So you've got the memory trade kind of right at the heart of the Korean index. So we've got movement overnight that kind of bleeds over in our markets. We're down about 20 some odd percent and change since the peak. So you're already seeing a pretty good unwind. Let's look at it on a chart. You know, you're down below the 50 conclusively now, but you've kind of burned off your overbought condition, and you know you've gotten some of this flushed out, but still not a great looking chart on a weekly basis, carnivores. So we're watching Korea, though. You know, it's the same paradigm as the Micron trade, as the NVIDIA trade, where you've got unbelievable price earnings, price book, price earnings growth ratios. So the fundamentals are there, but the charts look top heavy. Okay. Finally, on the inflation front, guys, we got rents down 1.2% over the last year, the 37th consecutive month with a year-over-year decline. Renting a home is now cheaper than paying a mortgage in all 50 of the largest metro areas in the United States. We have a housing affordability, home purchasing affordability crisis driven by interest rates. So the housing market is completely frozen. New houses are, in some cases, cheaper than existing homes because people don't want to rotate out of their existing mortgages. So we've got a housing market that is frozen, that is locked up, and it's all interest rate driven. Meanwhile, rents are falling. That's been a big component of inflation. It was sticky, but we've got this whole Strait of Hormuz, Iran oil thing that just kind of keeps flickering back up. Crude is down, obviously, pretty far from the peak. We'll take a look at it real quick, real time. But up 4% today, and up off 68 bucks from last week. So we've gone from 68 to 74. Here was the downtrend. We're kind of having that inflection point right where we took off at the beginning of the Iran situation here. So we'll be continuing to track oil to see if we can get the Iran situation sort of at a diplomatic point of the market perceiving the strait as being open and the tankers flowing with the consistency that they were before, although that seems to be somewhat of a long shot in the current environment. All right, where are we, guys? Let's talk about the top of the funnel. It's kind of gunked up. We do not have ideal conditions at the top of the funnel, okay? So we've been talking on this call specifically about lower inflation, declining bond yields, and accelerated corporate earnings as being the primary drivers to push this market higher. We're going into earnings season. We're probably going to get accelerating corporate earnings growth. So that component's not missing. What we are missing is lower inflation and declining bond yields. So we've got Mr. Warsh heading to Washington. We got inflation data due this week. We'll be listening for his views on the future path of interest rates, okay, as well as reform details. But the CPI will be out on Tuesday, tomorrow. PPI will be out on Wednesday, and retail sales will be out on Thursday. So we've got some economic data point hitting the tape this week that are most certainly germane to the interest rate discussion. Consensus expectations for CPI are around 3.8% year over year, down from May's 4.2. Core CPI ex food and energy is expected around 3.4 to 3.5 year over year, showing sticky underlying pressures. That's 150 basis points, roughly above the 2% target. You're going to want to watch energy and food, month over month trends. So if we got a cooler than expected print, especially core, that would definitely be supportive of the market, bonds, rates. Okay, anything hotter is going to reinforce a hawkish Fed view, and it's going to pressure stocks and bonds and continue to boost the dollar, which is going to hurt gold, Bitcoin, the latter, right? So overall, this report is coming at kind of a period where we've got this resilient growth in the economy. We've got a resilient growth in corporate earnings, but we got sticky inflation that just won't die. So we're not getting the driver for the other two catalysts that we need, lower inflation, declining bond yields. We need the Fed to get the lower inflation, to then in turn back off their hawkish rhetoric, to then in turn give us declining bond yields, to then give us a lower discount rate on all these future cash flows, right? And we've been showing you this 10-year. We've been trapped in this range for a couple years. Here we are. Come back down again today. But the problem with bonds isn't just rates are structurally too high for things like housing. It's also created a dead bond market. And this is a huge investment problem for all you advisors and retirees. You've got essentially a dead decade of bond returns where for the first time, really kind of in modern history, annualized total returns for the decade are negative. So we've got a bond market that just can't seem to ever really get a bid given where we're at in terms of issuance, given where we're at in terms of inflation, and given where the market seems to want to clear, overall debt levels at a rate that satisfies, the current levels of inflation that the market sees in the market now and in the future. Okay, so the market is demanding a higher rate of interest to compensate for higher levels of inflation, right? So this inflation bug has kind of become a feature of everything. And here we are, 30-year real rates are the highest they've been since November 2008. Okay, so anyone that says that, rates aren't high, they're wrong. I mean, from a real perspective, they haven't been this high since November of 2008. So the Fed is still leaning in against the post-COVID inflationary, impacts with higher for longer interest rates, right? All right. So that's a lot of bond talk for a stock market service, right? But it's the most important market in the world. We have to talk about it. It's a principal catalyst that we're going to need to go forward. So we do have a solid first half on the books, all right? And a lot of the volatility that we're seeing right now is just probably digestion of that big move up. If we can get through the summer and we can get through the midterms, history tells us that we'll get higher and go higher from here. But we kind of got to get through these doldrums. And we've got some things happening that are weighing on the market. One, we got two of the three largest U.S. share sales that have ever happened this summer. So basically, SpaceX and SK Hynix have come in. A lot of money. Okay, $85 billion from SpaceX, $26 billion from SK Hynix. These are staggeringly large numbers. And And it's really kind of taken the wind out of a lot of hot thematics, whether that be space, whether that, in fact, space really reversed on the SpaceX IPO. Here's UFO, down here at the 200-day. And you can see kind of what happened leading into the SpaceX IPO and then kind of where we're at now, right? So, we've got some thematics that have really had the wind taken out of their sails. SK Hynix, memory trade. When you look at Micron or WDC, nice intraday reversal brewing, hopefully, on these memory stocks right here. SK Hynix had been, all just on fire. You could see that in the memory ETF, DRAM, which had gone from 30 to 80 in a nanosecond between April and July. So guys, when you have this kind of move, you get these kind of corrections that are nasty, they're swift, and they're violent, right? The good thing is that you already have corrected so much. Here's Micron trying to hold that 50. Going to be big. We'll be watching that. So when you see all this capital rotate into these new issues, it becomes, problematic for the market when there's not just liquidity sloshing around anywhere. And we just went through a whole 30-minute discussion, 10-minute discussion about why there isn't. And the Fed has still got, rates out here at levels that are restraining housing and the overall, liquidity available in the market. So we've got this AI revolution that we keep talking about, right? And we still believe it's a super cycle. It's just that we're running out, or the market perceives that we're running out of private capital. You got rumblings about, bond issuance for data centers. You've got rumblings about how the hyperscalers and the Mag 7 are allocating all their free cash flow. You got rumblings about token expenses at companies on AI and whether or not they're getting a return on investment for the expenditure. Okay. So there's all this disbelief about whether or not we can continue to fund this build out without seeing an ROI on the investment quicker or without some sort of government involvement in the technologies build out. And the reality is, guys, I still believe that's what you're going to get. It's a race between us and China right now. We're winning. I had a slide somewhere, but I've forgotten where to put it. But anyway, it showed how dramatically we were outspending China on data centers. All this thus far has been mostly funded by private capital, right? And you're going to have, in the future, guys, a continued blending of markets and governments taking stakes in industries and technologies that are of national security interest. Now, that was a mouthful, but let it settle in because it's super important. Because if you're like a really hardcore libertarian free market guy, you're going to start to struggle with some of the dealings that the United States government's going to have with the private sector, okay? Because it's coming. They're going to take stakes in Anthropic and OpenAI and all these key large language model labs. They're probably going ultimately to provide some kind of capital backstop for some of these bonds issuance would be my imagine would be what I would imagine. So if we're going to take this thing to the full super cycle that I think ultimately it has to be, if it's a weapon, if it's of national security interest, if it's us versus China, then the funding will be unlimited, okay? And ultimately the rally will resume in semis and infrastructure and apps. But right now we're just kind of in a correction, right? We're in a chop. We're basing out. We're letting semis, which were red hot, correct, right? And here we are, up here, hopefully creating a high level box where the bottom of the box has already been established somewhere around 566, okay? NVIDIA and AVGO may go a long way into keeping this index afloat because both of those names have been laggards. They're huge market caps, and now they've kind of begun to rally. So that could alone keep that SMH chart up and alive. Now, this is a big week, guys. Got a big week, a lot of news. We got the inflation test. We just talked about that. CPI, PPI will be in focus, right? Any kind of cooling would be a major plus for risk assets, okay? We got earnings coming out. Q2 earnings season kicks off. So here we are. We got earnings coming out. All the banks will be reporting. I expect positive things from the banks. And then we get the AI reality check from Taiwan Semi and ASML. All right. TSM on earnings on Thursday, ASML earnings on Wednesday. We're going to be really getting some insight from the top level, the top of the food chain of the semiconductor sector, right? With Taiwan Semi and ASML. This is the equipment that makes the chips. These guys will be critical. What they say about in their guidance will probably determine the future direction of SMH. All right. So big week in inflation, big week in earnings from the banks, and big week in earnings from Taiwan Semi and ASML. All right. The trend. We're still at 5 of 5, guys, because all the major indexes are above their 50-day moving averages, but just barely. The Qs being the critical leg here, right? So we're still holding the 50, and the wedge is still alive. Okay, you haven't violated the downside here, but we're contracting. So this is going to get resolved this week. It's going to get resolved on the inflation data. It's going to get resolved on Taiwan Semi, and it's going to get resolved on ASML, right? So the bulls probably have the S&P to look to and say, hey, look, the broader market's better than what tech's been. We're already back up near her highs. We've got more of a flat base look here. And last week, we kind of broke the downtrend line in the SPY, right? So bulls will point to the S&P and say, hey, look, we kind of are ahead of the Qs. They're lagging. I think we're going to get that leg up. IWM above the 50, but kind of testing. So we need small caps to kind of catch a bid here, right? And then the Dow's been very similar to the Russell, but stronger, okay? And that's because some names like Apple have been hitting new highs, although it looks like it's reversing a little bit today. So you've seen all the major market ETFs are above the 50, except for the Qs. And the Qs are what we will be watching, because this is the pattern that's going to determine where the broader market goes next. If the Qs break down, the S&P is breaking down. In fact, if the Qs break down, it's all going to roll over, guys. Okay? So if you get a conclusive move down through probably 700 or so, 705 in the Qs, that's a breakdown. We're rolling over. That means the SMH is going to roll over further, right? That sell-off will be driven by semis and the memory names. So those are your watch two names, because they're going to tell you the general move of the broader market next. Okay, there's no broader market hanging up and staying elevated if these fully roll over from here. They're gonna roll the index over with it, right? So that means the S&P, if you get a failure here in tech, the S&P will come back down, and we'll retest the lower end of this range in this base. And guys, none of this is really all that shocking given the move that we had. I mean, this was just one of the all-time great moves up in a very short period of time, 9-10 weeks, nothing but upside, explosive moves, and then you get this. And it's come with some nasty sell-offs and all the hot trades, Korea, memory, semis, space. So this is just the summer, guys, right? This is what we kind of knew was going to happen. I hoped it wouldn't be as nasty as it was. I wish I would have gone to more cash, but you live and you learn. You didn't. You hoped and kind of believed that maybe you would get a little bit better of a sideways correction. But I'll be honest with you, after I look at the charts and I look at names like AMD and Intel, that's held up pretty well. I mean, I got a Dell. I mean, that's not a bad chart. Dell's about to go green, Dutchman. So, look, this is when a stock does this, we'll use Dell as the example. When it goes from 110 to 469, you got to expect a little bit of this now, right? So hopefully it's up here and we get some support through Mag 7, and I'll go through that in just a second, and we get rotation into other sectors, and it helps us out. So 5 of 5, trend miles in buy mode. If the Qs break down, we go to 4. Keep your eye on the Qs in that pattern. That's the key index. All right. Here's those earnings releases we're watching out for. We've got Citi and Goldman and JP Morgan and Bank of America, Wells Fargo, all tomorrow. They're going to report good things. You can see it kind of in the charts that are setting up. JP Morgan looks pretty good. Bank of America been running. The banking sector in general, KBE is your ETF for those that are looking. Pretty good uptrend. This is not a bad trend. Weekly looks pretty good. You could get a pullback, but it doesn't seem like you would pull back far. That's 67 old high. So you got banks coming in. My guess is between all the IPOs and all the activity in capital markets, the activity in oil, the volatility in oil, the stock market, asset management fees, given where stocks are, the banks, Morgan Stanley, all these guys, they should be killing it. Morgan Stanley will be on Wednesday before the open. Okay, ASML before the open on Wednesday. Taiwan Semi before the open. So keep your eye out. It's a big week kicking off earnings. Some regionals on Friday. So we'll be watching financials to see how they respond. And really, guys, the first 3 weeks of earnings are kind of where it gets a little crazy, right? So see what's coming. We've got this week, but then next week you get Tesla, you get GE Verona, GV. You're also going to start getting into the Mag 7 on the week of July 27th. So Meta and Softy will be reporting. You'll also see ARM and Semiconductor Land, Fortinet, Amazon, right? All the majors starting to report. You'll have Coca-Cola and Visa. So that'll be a big week, the 27th, because of the Meta, Microsoft, Amazon sort of kicking off the Mag 7 numbers. So we're headed into earnings season. I think they're going to be good, y'all. I really do. I mean, before ASML reports, what you're going to watch out for and what really is going to be important is if orders and guide language stay strong. So whatever they report is what they report, but whatever they say about guidance is really the key. If AI CapEx is still in a multi-year equipment cycle build out, they're going to say really bullish things. So if the order momentum softens those, so if ASML comes out and says anything about order softening, semis are going to have a real problem. Okay. And then over in Taiwan Semi World, I think what you're going to want to see is what they talk about in terms of earnings for 2026 and guidance. Market's probably looking somewhere between the mid 30s, maybe as high as 37. So they're going to kill it. Numbers will be great. What you're going to want to see is management raise guidance to mid 30s or higher. Okay. So we need ASML to tell us that the equipment cycle has not slowed and the orders look great. And we need Taiwan Semi to tell us they expect guidance to come in, as high as maybe 37% growth. That in addition to the hyperscalers, which are spending pretty much every dime they have, and then some because they're borrowing money now to come out and tell us that they're not going to stop spending, which I think they'll probably do. And what you're going to get, guys, is that earnings season's second quarter is probably driven by energy and IT. Energy is going to have crushed it. Those guys are printing it, and those stocks are running again. I hate to admit it. I got a lot of stocks that are hitting 52-week highs in that space. IT, though, is going to be second. So information technology will be the key to sort of letting everybody know, hey, look, we're still making money, we're still spending money, and we're not slowing down. It's still going strong. Maybe that will get NVIDIA's earnings multiple up off the mat. So here we are with NVIDIA earnings multiple going all the way back to 2019. We're at a lower level than we were 7 years ago. So the market just doesn't believe that the earnings and the CapEx is sustainable. That's the only conclusion that I can come to. There's still disbelief about it. So maybe Taiwan Semi can put some of that disbelief to rest by continuing to see this huge top line growth, just trend up, and then maybe we can see technology in general start to get some more respect from a multiple perspective, because tech is now cheaper than it was last year, big time. I mean, we were at the end of October, we were at a 30 times multiple. We're at 21 times now for PE on tech coming forward. So, guys, this is the market telling you they don't believe, right? Multiples coming down as earnings go up, and this disbelief is consistent. Every quarter, it's consistent. The dark is actual earnings. The gray is expected. Okay, look at that. Gray expected, dark what actually happens. What's the trend? What do you see? Earnings beat every time. Post-COVID and the sell-off that came after the big COVID-driven liquidity rally, the market just doesn't believe in the economy. And I mean, some of that's valid because a lot of people are not participating. That's a political discussion. We talked about it a little bit. That's why we have communists being elected to Congress. Yeah. We need broader participation. We need more housing participation. But the point is, the belief is the disbelief is systemic. Okay, so let's look out for earnings. I think they come in solid. I think that'll put that question of whether or not we're still in some sort of AI super cycle build out spin, we'll be laid to rest again, maybe for a little bit. Okay. So we had the June swoon, we hit July, we had hoped things would get better. July is typically a good month. But we're still seeing this rotation, right? And it's kind of this rotation from semis to software. And, we've got software trying to get up off the mat, come off the bottom. And you're doing it a little bit, but it's doing it at the expense of semis. So it's this notion of rotation, but it's sort of what I refer to as the whack-a-mole rotation. So at one sector's benefit is at another sector's expense. We need that phenomena to kind of lessen, all right? And for tech in general to just stabilize so that you don't have this dispersion, between software and semis that has been going on now for the better part of a few years. And it's a dynamic that now we're seeing some names that had really been weak, like Palantir, kind of come off the bottom. That was some real weakness as semis were running up. We've got names like Now trying to turn up, run towards the 200-day.
Yeah.
Same thing for like Team. And we're seeing action in things like Snow. And of course, all the cybersecurity names like Fortinet coming back strong, Crowd reversing back green, Palo Alto, same story. So select software names, Datadog recently added. We're seeing some strength. Okay. So trying to find some names in software that look like they could maybe benefit from this rotation that we've been describing to you. Snowflake's another one that decent looking chart up today. Looks like it wants to breach that old high on the spike. So we are watching that sector rotation occur into software. But I'm also watching the hardware component of this trade really, really closely for what I would call, the dark fiber phenomena of the 2099, 2000 internet crash, where you had all this hardware laid in the form of fiber that was dark. In the case of the GPUs, these old GPUs are not going dark; they're being used, and the rental rates are rising. So the hardware,
dude, you're in the. Sorry.
Yeah. So anyway, you're looking at rental rates rise as people question these GPUs and the rental rates. Hey, the other thing I think the market's got going for it, guys, is a return to the Mag 7. So we've been talking about Mags. Look, they got down below the 200-day back in June briefly. We're back up above the 200-day moving average. Now we're back above the 50-day average. You look like you've got this inverse head and shoulders that's played out in the Mags. Okay, so once we break this neckline, we should be up. I got Apple running to new highs. I got Microsoft revenue growth continuing to accelerate as the stock goes nowhere and it tests its 200-week moving average. I got Amazon that dipped below its 200 estimated moving average just briefly, which has always been a great place to buy. I got Nvidia breaking the downtrend line, right? Running up to 210 last week, along with Meta. Okay. And then I got Netflix with earnings sitting at the 200 as well. So the Mags look okay here. And the weekly chart looks pretty constructive. And this may be enough to keep this market afloat. Now, what I've been discussing with the Direct Access thread over the weekend is there enough liquidity to drive the Mag 7 higher with the small caps and the thematics? I don't know. I don't know. Gold and Bitcoin probably say no, there isn't, right? You got spot gold kind of telling you, hey, look, we've got real interest rates pushing on gold, guys. Gold yields nothing. So when gold yields nothing and bonds yield a lot, bonds are a better alternative to park large money. Gold goes down. Bitcoin, same phenomena. Right? We need these assets to rally, and we need the dollar to cool off. Here's the dollar.
Hey, Z, Monica did ask a question on gold since you're on it right now.
Yeah, come on with it. Great time.
She said, what do you make of all the December 2026 COMEX gold options? 6,000, 8,000, 20,000.
I think those are people taking a shot at some kind of reversal here, but I just don't see it. Look, I think you've got a trend that went parabolic, and you look here. I think what you're looking for in gold is ultimately the establishment of this. And then you're going to get this for a while. I think you're in a multi-year sideways correction for gold, probably like you were here.
Got it.
Silver will be the exact same except more volatile. And realistically, I mean, if I had to choose one to speculate on, like I was going to take some flyers, I'd before I bought like 6,000 options on gold, I'd just buy some Bitcoin.
Yeah.
I mean, it's the same trade in the sense that all the excess liquidity that flowed into gold and Bitcoin is flowing into the dollar. That trend will reverse at some point, hopefully. You need this inflation story to reverse, though, to get rates down and kind of break that spell. Hey, the real thing that's being crucified by this rate differential is the yen. So if you're not watching, if you want to go to Japan, now's the time. Here's your 10-year weekly chart. This is just an unbelievable run. We're at 162. This chart goes back 20 years, so you can see the dollar is mostly moving against the Japanese yen. This is where the cat's being let out of the bag, so to speak, as the dollar rises. It's not happening in the euro. So, look, macro world is a little interesting now, but not in a good way. It's all from a bad way. Like, I want the dollar down. I want rates down. I want bonds to catch a bid. I want the Fed to stop talking about raising rates. I want oil to come down. I want the Strait of Hormuz to open. I got a long wish list, man. As a bull, not a lot to lean on except that the Mag 7 looks pretty good. Software looks pretty good. And semis haven't given up the ghost just yet. All right. Hey, let's look at some sector stuff because, man, there's some movement here. We got computer networking, number one. That's the ANET Cisco trade. I've got Extreme Networks showing up. What are they doing today? What's Extreme doing today? Off a little bit, but that's a good looking chart. You can see why these guys are number one. There's Extreme, ANET, Cisco. Looks pretty good. We got consumer services staffing. It's kind of crazy. Hard to think that the economy's that bad when staffing's number two. Computer hardware down a couple of notches. Semi equipment was up. Computer software, security, right there in the mix. Oil and gas, refining, cracking the top 10 up from 28. We got some managed care names running up to the top. That makes me want to throw up. Business equity supplies. Okay, another, can the economy be that bad? So the point being, it's getting mixed up, guys. We're seeing some change up here at the top. I got computer networking leading the way now. I got oil and gas moving up. Got some banks moving up. Look at this banks, 47 to 17. Keep your eye on that. So this is probably indicative of a market that's broadening out and away from tech. Not necessarily a bad thing. We've talked about it. You just don't want that broadening to come at the expense of tech, right? Why can't I get it all? But here's what's leading. We're looking for names. We're looking for stuff still working. We're looking for leadership. But I got to tell you, the setups are few and far between. I could tell Dutch and I were both suffering from that phenomenon. Over in a systems check, color guard weakening. You can see we've gone from we've got no green, got two reds. Just can't seem to get the advanced decline line up. I don't even recall the last time we had a 3-to-1 advanced decline ratio. It's been so long. So you just don't have this full participation on any given day where small caps, large caps, and mega caps are all kind of working, across the board. All right. Dutchman, get in here, man. Talk to me about the short-term portfolio. I've got positions up from the wrap on Friday.
Right. Well, the only two positions we've added today are BKSY and FTNT. BKSY is got a great chart. I think it is bottoming, and we may take a little patience with Black Sky. May take a little bit of patience to get that come all the way around, but not real worried about it. FTNT, which we just added 800 shares to, the chart looks good. It's got a real strong bid, and that's in that software cybersecurity space. So that's actually profitable already. Other than that, we've got quite a bit of biotech out there. Largest position being RLAY, off about $1.36 today. RYTM's off a couple of bucks. That's our number 2. So really, the bottom line is if those two, and if biotech, holds and moves up, we'll be all right. eBay we've got, which I'm not worried about. That's number 3. eBay's a real champ. I don't know if anybody's been around watching that for a long time, but it seems like every time you look at it, it's always only about 4% or 6% off of its all-time high. It just keeps charging ahead. It's just a machine.
Look at this monthly chart, Dutch, going back all the way to the IPO in '98. I mean, this has just been a great stock.
It's just an absolute money machine. It's a asset light, high margin business, which of course we love. Kind of like with our buddy over there at Powell, he's turning POWW into that. And I'm getting off the topic here, but he's turning that company from an asset heavy business into an asset light, high margin business. Where is that thing today? Oh, 247. All right, so that was one, which, by the way, is in the Russell 2000. Market cap's almost at 300 million now. So we flagged it at about $1.80, $1.90 a while back. When was that? November of 2025. And that's really because the guy who was a very large shareholder took over and became the CEO and took control of the company. Immediately sold off their ammo business, which was making bullets. It's a good business, but it's a low margin and it's asset heavy. You got to have a lot of machinery and you got to have a lot of people and all that stuff. So he blew that out, sold that off. Can't remember who he sold it to. Might have been Winchester or somebody like that.
It was a traditional gun manufacturer. I think it may have been Winchester.
Yeah, it was somebody like that. So he got rid of that, and now you can see that after his last earnings announcement, what the market was kind of waiting around at $2 for him to see whether or not he was full of shit or whether he was really going to do what he said he was going to do. And they realized that he is doing it, and it's the numbers are starting to come through. And that guy, we know that guy. I know that guy pretty well, and we know him for probably 8 years now, 9 years, and he's a real solid technology guy. He's not a gun guy, all right? He's not a gun guy at all. He's a technology guy. And so his focus is, how do I turn this into, a platform for, and he changed the name really from ammo.com. He changed it to Outdoor Holding Company. And so that kind of gives you the sense that he's going to take this thing to a direction where maybe more than guns and ammunition are going to be there. It's going to be clothing. There's going to be everything surrounding archery. It's going to be everything surrounding kind of people who are interested in the outdoors. For all I know, the guy's going to end up selling like Polaris, vehicles or something on this site at some point. So anyway, but he doesn't have to take inventory of anything. That's the point. He has no inventory, almost none. So he's just the middleman who's putting buyers and sellers together, kind of like eBay. That's why I bring up POWW right after talking about eBay. You guys are probably wondering, why in the hell is Dutch going off on this tangent? That's the reason why. See, there is actually a brain here, and it does work. So eBay is the middleman. Powell is a middleman, and for a different space, not quite as broad, just a focused area. Okay, and by the way, POW is something that if it does successfully become a, the marketplace for a broader group of outdoor things, who knows? Somebody like eBay may want to buy them, or an Amazon or something like that could fit right into those. So he got paid $7 a share for his stock. Okay, that's his target. He wants to make his wealth back, plus take it to $25 a share. So we're at $2.50 a share. His mark is $7 before he gets back what he was paid in stock. And that's why he worked hard to become the CEO, is because he was watching his wealth vanish. And he said, I'm not going to let that happen. I'm going to turn that around. So that's the POW story. Anyway, back to the short term. ANET is Hive is the next fourth largest position. We're off a bit there. I'm not worried too much about it, but watching it, we're getting close to where we would have to blow out of it. But it's really just moving around in the box. Then you got ANET, which is essentially a great setup, doing well, pretty much today. And then Dell, which didn't look good for a while early this morning, and it's moving around. Dell is in a high level consolidation here. So again, bouncing around in the box. And what do we need with a lot of these stocks? I'll tell you, we just need more liquidity. We need some kind of catalyst that so far is just not there. That's what's making things very frustrating. I'll talk about that in a second. Next on the list, we have Blaze, BLZE. Backblaze is the name of the company. We call it Blaze, Backblaze. That's a smaller cap that we know life changed for those guys. That's one of those Russell 2000 type stocks that got a deal with CRWV. And so their life changed, where they were really kind of a small company doing 10, 15, 20, $15 million a year, a quarter, or whatever the hell it was. And all of a sudden that looks like it's going to be a lot bigger number. Like they're going to soar over 100 million in revenues and that kind of thing. So, so we like that one. It's made money for us on some trades before, so we're hanging on to that one. The other one, by the way, we call it the turd, but it's TVRD is the symbol, TVRD. That's another biotech. We know there's price targets on the street of $10 a share and $12 a share from Wall Street analysts. It spiked up on some good news from one of their products and one of those FDA type of news items. Anyway, we traded it big and made a lot of money on a first trade. Then we let it come back down, and then we picked it up again. It's a pretty large position for me personally. So I just did full disclosure. And by the way, the options on that stock is run by a criminal syndicate. I can tell you right now, do not mess around with the options unless you're an absolute expert on TVRD, because they will take you out in the backyard and skin you and smile while they're doing it. They're very, very bad. So just be careful if you're trading any options on TVRD. But I do think that the stock is going to probably run pretty good here. I mean, we do have, I think, a bottomed out this morning around 299, 298, found a bid and has kind of traded up a little bit off of that. So I don't think we're going to see a whole hell of a lot more downside on the position. So people who are patient can build positions there. And I think you're going to see sort of a $5 number here, not too long. And being that it's kind of a lower float, low market cap stock, this is one of those things that when one of the biotech funds like Fidelity Biotech or somebody like that decides that you got to get behind it, these things can spike pretty good. So the other one I want to just bring attention to, we have a few others, but the other one I want to bring attention to is Butterfly Networks, BFLY. BFLY has had a running up here today a little bit. This is one that, just so you know, the options on this one are pretty good. The guys aren't criminals. They do a righteous job of filling your orders at decent prices. bottom line is I like the stock to 10 to 12 and a half. There's 10 options out there in January. January 10s and January 12 and a halves are out there. And this is one of those stocks that I think that, you could just probably get a spike to a 10 or 12 here anytime in the next 30, 60, 90 days. And if that happens, then your 10 and 12 options will pay off. Of course, owning the common is what we have here in the account here. We've got, it's fairly small position. It's 5,000. It's not tiny, but it's that's kind of the last one I just want to bring attention to. We've been kind of shucking and jiving around this market. Okay. It's not easy to just, you can't just throw your money into CLS or VRT anymore. Okay. In the AI trade, because you'll get your ass handed to you. So what do? You got to jump around a little bit, and you got to be nimble. And what we've done is kind of been nimble in two areas. Number one, we've gone a little bit smaller cap, special situations, and we've gone biotech and hiding out in biotech situations and smaller cap situations. And then when we get to the larger, higher quality stocks, things like FTNT, things like eBay, things like Dell, things like ANET that have real good relative strength, great setups, and a real nice sort of solid bid under them where they're not just collapsing. And that what we're seeing with some of these other positions is that, they can just collapse on you and drop 30 points, 60 points a day, like a Micron or whatever. We've just been staying away from that stuff for now. We'll go back to it when it's the right time. It's just not the right time for short-term trading. That's all I got.
Thanks, man. I think that's a great encapsulation of the environment. When you were talking, I was bringing a chart up, Dutch, for them to see. One of the things I had talked about over the weekend with the direct access guys was you just got to learn to identify that this environment is different, than this environment. And when you get here, like we've been for the last 3 months, and you start having these violent swings down, you almost have to really keep yourself from wanting to trade too much at all, because it's just a really difficult environment to trade from a short-term perspective. So, don't let the summer, which may continue to have these kind of, right? Don't let it chop you up. Okay. And you can do that by either sitting tight in some of the longer term stuff or getting to cash and following Dutch on a short term basis, being flexible and nimble. Okay. Over in the second rotation portfolio, we've got Fortinet we've added, we've got ANET we've added, we've got Now that we've added all in the software space, Datadog. So I've got 1, 2, 3 software names in the top 10, including now an ANET name for networking. So we've really tried to get as much of that exposure as possible and some names that are working in software. Datadog and Fortinet and Now, all being pretty recent additions. We've also added Okta in the space. Okay. Trying to see if we can let some of these winners, big winners like Dell and ARM and Intel, just base out for a while. Okay. Verdicts out on Micron and SanDisk. I mean, we've entered in on a pullback, but we don't know if it's pulled back enough. The problem children are really more in optics and in fuel cell. Kind of knew both were risky when we put them in. Hopefully we got a bottom brewing here in Sivers. We got some insider buying over the weekend. I highlighted to the direct access guys. So we'll keep that one around for a week or two, maybe. Let it play out. Fuel cell sitting at the 50-day, kind of getting sold off with some of these names like BE in that alternative energy space. We want to see this one reverse. We had sold it in the long-term trade portfolio. Shouldn't have added it maybe to the second rotation if we don't get a list. But those are the two that we've got on the short lease. Everything else is within the confines of being very reasonable. ASML, hopefully we get a reversal on earnings there. So outside of Sivers and Fuel Cell, which are two of our smallest positions, don't really have any problem children. So we'll be seeing if our software names that we've added can kind of step in here, and if our hardware names will hold up. We sold TE, BB, TSEM, and Core Z. TE and BB at losses, TSEM and Core Z at small gains, I think. The buys were 8net, 4.9, Datadog, and Per. Over the long-term trades, I've only got one. We're going to sell mRNA because I hate biotech and these guys are criminals. It's about break even on the trade. So we'll shut that one down. And I'm going to buy FA, which First Advantage, if you don't know, is kind of a interesting company. Global leader in background screening, digital identity verification, and risk mitigation solutions. Helps HR and people who are out there acquiring people. So you got continuous criminal monitoring, I-9 verification, social media screening, and it's all leveraging AI. Massive databases they have access to. Most of the Fortune 100 companies are working with them already. So this may be a big company you've never heard of. 3.35 billion market cap. Kind of getting back to IPO highs in the 20s. Got some good volume coming in. So maybe we're going to break the IPO high around 22, 27. This one shows up over in Market Surge. Probably pretty high today. Yeah, there it is. It's got earnings in 24 days. There's your monthly. Relative strength really turning up strong. So adding FA to the long-term list, closing down mRNA. Just to highlight today, guys, some things I'm noticing. Day like today, leaders include, we got a healthcare services name. I got a couple of energy stocks like VLO. It's at a new high. Marathon, new high. Oscar Health is running. Seeing a lot of healthcare names today. But you can see the 250 list is not having a great day. Humana, Phillips 66. When these are your leaders, you know it's an off day. Snowflake is probably one of the few software names up here at the top. There's Casey's General Store. I know you guys have talked about this being a pizza operator with a gas station. Some of you have been long that stock for a long time. It's been a beast. But this is not a mix of, bull market dreams here. Okay. The other thing I noticed over the weekend, right here, healthcare stocks rise to the heart of IBD's elite list of growth names. So we had a lot of healthcare names on the IBD 50 list. Oscar, OMDA, ASTH, Hinge, Adaptive Biotechnologies, Lilly. Okay. So we've got some real rotation.
Moderna tried for a while, right, Z? I mean,
What's that?
Moderna tried for a little bit, right?
Yeah, look, it had a good run. I was a little late, and we were up on it a little more. And I really think, quite frankly, it can go higher. I don't like this stock because I don't like the company, and I don't like their role in the COVID thing. But that's my personal problem. But yeah, so look, I think with IBD 50, this is probably the most healthcare names I've seen on that list in a long time. And you kind of want to write some of these down. Hinge, one we traded, Oscar. I know some physicians that hate that company, but stock's doing well. But CrowdStrike's there, Datadog's there. So you've got some of those software names we've highlighted as well. But this is going to be something you're going to want to keep your eye on. does this biotech healthcare, trend have legs? And if so, who are your winners going to be? I would also add that one of the things I've noticed over the last few weeks over in Open Stock Ideas, I got very few names at the pivot, usually only 6 or 7 at most. And some of the ones that are at the pivot are things like Coca-Cola, Schwab, here's eBay. But not a lot of tech names near the pivot because most of those charts are busted, right? They've run up and they look like, a Micron, where it's a question of we've run up and now how far is the correction going to be? How deep is it going to be? And how long is it going to be? So I don't see earnings necessarily being enough to reignite the run up. I do see them being enough maybe to stop the bleeding. I think the only thing now that's going to reignite this rally full blown is for inflation to cool and for the for the Fed to stop talking about raising rates. But that's just maybe my moody opinion today. That could change tomorrow. All right, we are at 1 hour, Godfather. So we're going to shut up and allow these fine people to ask us some questions.
Hey, by the way, I wanted to say it's fine for you to say what you said about Moderna, okay? And it's fine for you to blow out of something, and everybody should be able to do that in their own life. You don't have to support companies that you don't like and that you don't like what they do. Okay, you still can't let that cloud your thinking all the time. But these guys were bad dudes, and they still are.
Well, as I think about the damage that inflation has done to society in aggregate, and I think about the damage that COVID did as a disease, I really would love to see the cost benefit analysis done on the two for a discussion to be had about what we did and why, from a policy perspective, it may or may not have been wise to do, from an affordability perspective. But,
you know why we'll never have that discussion, right?
Yeah, we know why.
Yeah, we'll never have the discussion because it's actually such a disaster. Nobody can even step up and admit
that's right. It's quite frankly, the entire world is dealing with the impacts 6 years later.
It's unbelievable.
It is unbelievable.
Thanks for saying that, though, Dutch. Because if someone's convictions, they should follow those. And if those are your convictions, some people say, like with Disney. I remember even when I was a guest subscriber during the trial, and I asked you about Disney, and I think I have that response gave me framed on what your convictions were. I was like, I told Jen, I said, I love him. If he'll talk to me like that before I pay,
a lot of guys don't like Netflix for the programming and some of their
right.
What seems to be political beliefs or agendas in some of their programming, and that's something to factor in. Disney, another entertainment company that has have made questionable decisions as it relates to some of their posturing politically. Done well for the stock, so
nothing wrong with voting with your feet and your money and your dollar and who you support and who you don't. There's a lot of people out there that I know I walk into a Starbucks and I see the kind of stuff that they have posted and I want to throw up. So I look for a coffee shop anywhere else.
Hey, I noticed Starbucks is on the move. It's been in a range for a while. We're long bros. Hopefully that'll catch a bid with it. But hey, what do you got out there, Godfather?
Yeah, brother. Okay, so let's go. You answered several.
Brothers.
Yeah. Steve K did ask when we were talking about gold if you think silver is going to follow the same path, or do you think they could go different paths again?
No, I think these two are absolutely tied at the hip. The correlation is going to be in excess of 90 some odd %. The weekly looks the exact same. The only thing I would say about silver versus gold is we've had a deeper correction. So you more or less already pulled back more than 50%. And that's probably a plus. You've also really burned off, this overbought condition.
And you had a chart when silver was running that you even thought that silver was still behind where it should have normally been for regular inflation, right?
Yeah, well, look, I mean,
From like the 80s.
based on the historical silver to gold ratio, silver should be trading much higher. But look, here's what you've been able to do. You burned off that incredibly overbought condition. You're probably getting close here, guys, because the old high was 50, right? Well, the low here was 55. And you typically kind of have this trend line that's more or less going, up. So the idea that old high back in 2012 is going to be the low here, but a little bit higher, I think we're really close. Okay. So if I own silver, I sure as hell ain't selling here. In fact, if I'm like a silver bug, this is where you actually start buying again. But you got to know that you're going to do this. Like, we've got to, guys, I know this is it's an abstract concept, but when something moves up very, very dramatically in price in a very short period of time, inevitably what happens is it goes nowhere in price for a long period of time. This is how markets work. Up, nowhere for a long time. Up, nowhere for a long time. And chances are with gold and silver, you've done your up, and now you got to go sideways in time for a while.
And by the way, there are certain stocks that act that way too. Microsoft didn't do anything for years and then went up, doubled and tripled. And Disney, for example, there are some big stocks out there that just do that.
Check out Microsoft on a long-term chart like Dutch is talking about.
That's right. That's right.
Go back 50 years.
Look where it went from that's 2000 to 2013. It didn't do anything. That's a long time.
Right?
Mm-hmm.
Steve Ballmer era, right?
Right.
He's just getting options on his way to becoming one of the richest men in the world, not selling any.
I knew it. I was hoping you'd bring that up.
I mean, look, I'm serious. He's not selling a single share. Meanwhile, Bill Gates is having McDonald's with Warren Buffett, who's telling him to diversify.
Right.
Okay, yeah, diversify. That worked out real fucking well, Bill Gates.
Yeah, that's right.
You sold all your Microsoft stock before it went on like the greatest tear ever.
Of all time, right.
He would have been a trillionaire. Bill Gates would have been a trillionaire if he would have just sat in Microsoft.
Right. But did it go up because he sold some of it? I mean, does that give the liquidity you need, or
no? It just look. I mean, he was selling. That stake was getting rotated, from here to here. So no, it's just guys. Stocks do that. Look, Oracle did it. Cisco did it. Look at Cisco. Going back, look, we're just now, and so that's what's interesting about Cisco is, we just kind of took that. We should have a run here. Although this stock has already gotten really overbought. So, you can look at gold and silver and say to yourself, hey, I'm going to buy it. I'm going to stack it. It belongs in my portfolio. It's portable. It's durable. It's outside of the banking system. As far as it being a speculative trade at this point, I think that trade is dead. Good question. Next.
Absolutely. But Perry C., with all the talk of edge AI being the next wave, is the market saying the data center is over as a theme?
No, I think.
And for those that don't know about edge AI, Z, maybe touch
So, okay, hey, look, let's just talk about these language models and efficiency. And there's a belief in the market that with some of these cheaper models, you can achieve, 80, 90%, 95% of what the more expensive models are costing at a much, much, lower power consumption rate, at a much, much lower compute rate. And so the idea is that there's going to be such efficiency gains, in this whole model building process that you don't need all these data centers. You don't need all this power. I think that belief is fundamentally wrong, because no matter how efficient some of the newer models are and cheaper they are at doing mundane tasks, there's going to be demand for the highest end of compute. And the reason being, guys, is, so let's separate this into like a technology discussion. There's no way in 18 to 24 months that AI is not better at most things than almost all humans, in fact. It's a fact. Like, I just read this whole paper about, it was like a top physicist, and he was working on a couple problems, and he had fed a problem into AI that he had been stumped on for a few months, and the research had stalled, and then the AI gave him some really unique original insights, and it kind of led to a breakthrough. And he was like, man, this is kind of amazing. Like, this is crossing the Rubicon from the perspective of, this is not theoretical anymore, the things that I'm talking about. It's actually happening, that AI will be better than the most advanced researchers in the world at their subject in less than 24 months. That seems to be the given conclusion. And so this idea, I think this is why the cybersecurity stocks are rallying so hard, because it's a weapon that'll be able to eat any other software. And so we're literally developing a weapon, and they're not going to stop to develop the most powerful weapon, which will involve the best models and the highest technology. And then that's going to get gated off. And what we're going to get access to is like, the remnants. It's going to run on the old GPUs. So I don't buy the idea that we're going to have these massive efficiency gains that render the data centers obsolete. I believe we will run out of money. Like, to me, this is what the only thing limiting this, guys, is the money and the power and the electricity. It's like, do you have the will to build the GPUs with the wattage to push this technology as far as it's going to go? And the answer is going to be yes. Because if you don't, you're going to lose civilization. It's that simple. I mean, I hate to make it some grandiose thing, guys, but it is. So you're going to have these periods where Micron sells off 40 or 50%, but in the end, I don't think that narrative is going to play out, because I think this is a race to build a weapon at the nationalist level. And I don't think if you have that framework and you're still working under the old framework, I don't know, maybe you are right. Maybe we're not going to have the money to finish this out, and the Fed's going to keep, things tight, and you're going to blow up this semiconductor trade, and we're going to roll over. And totally possible. I just still think that is the lower probability case. Good question. Great question.
Yeah. And TW asked, he said, with sector rotation, he said, obviously, not knowing what's going on, do you think that they should be more in cash or scale more into cash?
Look, you're going to see me. Follow me. If you're in it, you're in it, and you should be up dramatically on the year. If you're not in it, you're trying to put some money to work, buy the new names. Don't buy the old trades. Okay. So buy the Fortinet, buy ANET. Don't go into the losers. Don't buy the stale semi names that are up 100% like Intel. Okay.
And that may run
But-
into BE. We have a question on BE and Nibis. So, I mean, I think both of those are right. So,
Look, guys, this is one that comes up a lot. My comment on BE would be we're exactly where we were in June, and we're exactly where we were in April.
and we owned it that whole time. So,
and
right?
we've owned it the whole time.
Yeah.
Right?
Yeah.
So, this is where I think, guys, I think the idea is if you want to ride stocks to be up 100%, then you're occasionally going to have to hold them, and it's going to look really, really rough. I mean, was anybody here? And that's a rhetorical question during this, right?
Right.
Like, were you here? Yeah, I was buying this stock here.
Mm-hmm.
My guess is we just kind of started doing that again, right? So, BE, hey, it doesn't spend a lot of time below the 50. It doesn't really ever get near the 200. So that's what I'm watching, right? I'm looking to see if we can hold this last gap up, because we're kind of feeling this one, right? So BE might be a name that if we break down this week, I might reduce that position on Friday.
Okay, got it. So,
And
you're where you want to be. You're confident in. But I guess the bottom line is, the portfolio. You're confident. You're happy. It's doing what it should be doing.
I mean, look, when you say, hey, this would be the way I would characterize it, guys. You follow the rules. You sell your losers. You scale into your winners. You have trailing stop losses on your winners, so you stop out of them as they pull back. That is a long-term trend following strategy. You're not going to catch. I'm not going to sell BE up here, guys. That's not how it works. If you would have sold BE up here, you wouldn't have caught this move, because you would have sold it here. And you would have sold it here. And I think, that's part of, like, okay, even on the long-term list, I mean, I don't have the numbers over here in front of me, but I just computed them.
Well, Jen said 36%. We're up in BE in sector rotation right now.
Yeah.
Still 36%.
Right. So, the idea with the long-term list is, okay, I got a lot of names down 15 to 30%. They got about another 10% before I start selling them all. Right? You follow the discipline. You follow your rules. You have a structure. You follow it, right? That's how you got up so big, was following the trends. If you would have sold MBIS at 168, you wouldn't have had it at 230, 299. Now, I have reduced it several times, right? But guys, I think MBIS goes to 600. If it does, I want to be in. Right now, in the short term, I'd like for it just to get back up above the 50-day.
Well, see, you already you pinned it when you're on the BE chart. You had already said everything. You said if you would have sold it here, you would have sold it down there, and you're 100%. You always go back to your lowest level of training. That's what I was taught. So you wouldn't be there. You would have sold out at the bottom.
Yeah, everybody's like, well, why didn't you sell at 350? Well, you would have sold it at 180, and you would have sold it at 147, right?
Yeah, there's no difference in that chart. That chart's the exact same. You've just moved up. So
and then it went from 140 to 75, and you lost half your money. And then it went from 180 to 116 and you lost a quarter of your money. And then it went from 350 to 220 and you lost a third of your money. I mean, like, guys, this is what stocks do. Now, there was a short report,
Yeah.
and I have read it.
Hindenburg, right? Yeah.
And there is some interesting questions laid out, but I don't necessarily buy the thesis fully. So, and here again, guys, if they're going to build these data centers, you can't tap into the local energy grid. They're not going to let you. The people are not going to let you. You got to be able to power it yourself. Bloom Energy is one of the few places you could get that energy right now, scalable. So,
yep, you probably have the
But
same
hey-
issues that we have here in Tennessee. They're out there protesting because they all want to go up to TVA.
That's
and
right.
You got every local saying you are not coming over here. You're just
But
not.
guys, you need to hold that trend line, right? So we're getting close. Follow me this week. Follow the trades. The weekly time frame is the time frame that operates on. Good question. Next.
Yeah, thank you. Very good. When would now be a good time to sell calls on stocks like CRDO and App if you still owned them?
If you still own them, yeah, you could do some covered call writing to maybe bring in some cash. That's really more and depending upon how you're managing your own personal portfolio. We don't sell and buy options with the stocks that we're trading in these portfolios. If you are in Credo and you want to stay in Credo, then yeah, I mean, look, you could come in and sell some calls and bring in some premium. I would probably do it at an area though above your cost basis if you were intending to hold the stock. So don't get your stock called away at a loss. 50-day is at 226. This is one of these names that has become very, very choppy every day. So there's a lot of volatility. You might be better off selling calls on an update. Right.
Yeah, Bradley says PGNY market surge shows in a profit zone, but shouldn't the pivot have been around $28, suggesting that the RS is too low, the RSI is too low?
I mean, look, I'd have to put the reason why you might be getting confused on the chart is probably because it's been in this downtrend thing. Let's see if we can see what he's talking about here.
Yeah, it says in profit zone, but shouldn't pivot have been around $28? So I think maybe the pivot there's putting too low is what he's thinking.
I'm thinking in this case it looks like it had the pivot here
Yep.
at a lower price. So really kind of on that breakout day, had a cup with a handle, but yeah, they defined that as the breakout day and that was the profit taking zone. Some of that, Bradley's because you got this kind of ugly bar here would be my guess. And the fact that the stock was in a downtrend. If this was at an all-time high, that probably would have been the pivot here. But because of the way this was structured, and I'd have to go back and read the rules as to how the algorithm within the charting system is defining this, as the breakout day. But that's what it did. As far as where this thing goes, earnings in 17 days in the right sector, charts moving up, a little extended, but not a bad looking chart. I mean, if you're in it, you might just want to let it ride. Put your profit at, your stop loss at 31.50 or something here. See if it goes higher. Yeah, I mean, look, Bradley, monthly's cleaner, but my guess is it called that breakout the pivot area instead of this because you were coming from, this downtrend pattern versus being in an uptrend pattern, that being an old high. Good question.
Yeah, absolutely. I've got one more. Dan P said, "What's going on with KO? Was it Kospi? He wrote it as KOSPI.
That's the Korean market. So yeah, we talked about
Oh,
it.
okay. I've got two questions on Korean market. Yeah.
Okay. So look, Kospi's down, Korea's down about 20 some odd percent already. We had a parabolic run as we had talked about and highlighted on these calls. You can see it pretty clearly on the monthly. That's a country stock index, guys. That's not an individual stock. Right?
Right.
So you had a country's index go from 47 to 168 very, very quickly. So this is what's happened. You've had this explosive move up. Now you're correcting the overbought condition. It's all about how deep it goes. Scariest thing about this chart is probably the distance from the 200-day. I doubt you get here. Hopefully you start to catch some kind of bid in here. If you zoom in, there's your daily. Okay. So we've broken the 50-day recently here, doing it again. So you need Korea to stabilize. Micron is going to track Korea. The good thing about all this is that Korea is already down 20%. That's the good thing, right?
Yeah.
The bad thing is if it goes down 40, it's going to take Micron and the tech sector with it. There's semis not looking good there. You're going to need NVIDIA and AVGO to carry that load, or they're going to roll over too. So keep your eye on Korea overnight, because if they can't get a bid and it's going to conclusively kind of come to an end, then you're going to have maybe a fall down to the 200-day. And that's a ways.
Lastly, what do you think of Meta? Meta's had a couple of really big jump ups. Looks like it might be in a flag pattern. What are your thoughts on Meta?
So we did
I know you did a lot of research.
Put spread on Meta on last Thursday on the DA call. Immediately went our way.
Yep.
Some guys already covered it, but the Meta trade to me, we talked about it here, lot of support at 550. You've broken the downtrend line. Now it looks like we go to 700. Cheapest of the Mag 7. I actually like Meta here. If I was running really big money, I'd definitely be a buyer of Meta here. And this is kind of one of those stocks where market questions every dime they spend, gets no respect from a multiple perspective, has seemingly validated the NeoCloud business by entering it, but market seems to think that that's an invalidation of it. So this is a stock that people just don't believe in. Kind of crazy to think you're contrarian buying Meta, but you kind of are.
Okay.
Just the market really is questioning the CapEx expenditure at this company, whether or not it's going to pay off. There's your weekly. We may do some more option rights on this stock I think you've kind of got a good floor here.
Well, they've done some dumb shit in the past, so maybe it's,
Hey,
that's why the market doesn't move.
Look, the beauty of that, though, Dutch, is they just print so much money, it doesn't matter.
Yeah, I knew you were going to say that. You know what? You're right. They print a lot of money.
It's just
how long how long did he stay with those Meta goggle glasses?
I was just going to say the goggles.
What
Yeah.
was that? Those are actually kind of cool. But what were the things? Danups had those glasses at one of the academies. It was really cool. He's running around the room and he's videoing everything.
The Meta Ray-Bans video.
Yeah, the
Yeah,
Ray-Bans,
you know,
yeah.
look,
That's
guys.
right.
The thing about Meta is
It was the virtual shit that they
Metaverse.
stayed with.
the
Metaverse.
metaverse.
Right.
I think he nuked in excess of 95 billion on that.
that's a big nuke, dude.
You
I
know,
could
when
do
you
that.
think about your worst trade, when next time you think about your worst trade,
Yeah, right.
just shake it off, man. You didn't burn
Yeah.
95 billion on the metaverse.
95 billion.
So yeah, look, I like this trade. I like Meta. I like this stock. I think they'll prove the naysayers wrong. Yeah, good question. This is
Okay, yeah.
probably one of those that if I was value, if I was long-term money, big money, I'd be a buyer here for sure.
Okay. I mean, that's
I think
what I
the
have.
board. I think the board said, "Hey, the next time you want to do a metaverse thing, why don't you just give us the money to put in treasuries, and we'll kick you in the nuts, and we'll be ahead."
Well, hey, you know, you kind of
Jen said that the next time I wanted to
Well,
refinance
we
a
better-
boat. She said, "Oh, you want to buy a boat? Here, let me give you a different thing to do. I'll just kick you in the nuts."
That's right.
you've got to think though, guys, that and look, this is a debate that's actually happening right now. In fact, I got into some snarky exchanges with some people over the holiday break about
No way.
the hyperscaler spending, and there's this view
Right.
out there. Literally, there's a view out there that it's like a giant fraud, and that they're
Right.
lying about the depreciation schedules on the GPUs, and that Mark Zuckerberg and Sergey Brin and Jeff Bezos and Elon Musk, they're all engaged in this giant circular Ponzi scheme in AI, and that they're misallocating trillions of dollars on a technology that has no future, and they're all doing it to benefit in the short term. And it's like, you just read it and it sounds so silly in the sense that why would Mark Zuckerberg purposefully destroy his company? Like it's nonsensical. He believes in the technology. He believes that it's real. He believes he has to spend $1 trillion to stay relevant. Whether he's right or not, I don't know, but he's not a criminal. And it's not as if these guys are engaged in a circular Ponzi scheme to defraud the public at a level that would exceed, Enron, or like it would make all that look like, peanuts. And so I think it's really silly. If you want to think it's a misallocation of capital, you can make that argument. If you want to make the argument that AI will not return numbers high enough to justify the spend, you can most certainly make that argument as well. The idea that the largest technology companies in the world are engaged in fraud is just ridiculous. Like, it's ridiculous.
Well, I think the other issue you have, Z, is these are the same guys, him and Musk. These are the same guys that had these same crazy ideas just with no money when they started these. So why do people think they're going to change their line of thinking since they have money? I mean, when they invented Meta or Facebook, right?
I think in some cases, I think it's a great thing that you have these founder-led companies where huge amounts of their net worth are tied up in the stock, because in the long run, they're going to do things to maximize the value of that stock. And I look at something like Fortinet as a great example. I think two brothers or two relatives own 40% of the float. So most of the things the company does is to go make the stock go higher.
Well, if this whole AI spending thing's a fraud, then what's Larry Ellison doing?
Hey, great question. And look, this is the poster child of that. Look, this is what I mean, guys, of Larry Ellison has bet his entire company, his entire personal fortune on this build out. And right now he's being punished. This is at Oracle is trading below the 200 week moving average. I mean, that never happens. 3 times in the last, 6, 7 years. Take it even back further. And then from a monthly perspective, so Larry's been here before. He's bet his company before. But the market just isn't buying it this time right now. So we'll see. All right, Godfather, we've kept these
brother,
fine
I'm
people
good.
for an hour and a half, man. We'll let them go.
Yeah, I appreciate it, brother. Thank you, Dutch. Z, y'all have a great day. We'll see you next Monday, everybody.
Thanks for being here, guys.